Hello Wolfpack. So the interest rates decision was released, was made, and that was 25 basis points rising. So very minimal, very soft move there from the Federal Reserve. And that was very expected. I mean, if you looked at my Twitter posts, if you looked at my video on interest rates, I said the most likely scenario was a 25 basis point raise. And I said when that happens, we're probably going to see some short-term upwards movements. Short term is a debatable kind of short term, by short term, it's hard to know exactly what to mean. But what I mean by that is that interest rates basically are very long term things. Okay, I was expecting more volatility in the short term, but it seems as though a 25 basis point raise was priced in. Now, if it was a 50 basis point raise, or if the market stayed the same, there was no interest rate changes, that would have led to massive volatility. But honestly, it was a bit of an anticlimax. But the long term effects are still there. Now, if you watch my video on interest rates a few days ago, you would know that it is not my opinion, it is the objective fact of the situation that interest rates rising are bad for traditional markets. That's not my opinion. That's nothing to do with me. Alright, as a student of finance at university, or at least I used to be, and as someone who's been in the market and trades it full time, that is the objective reality, right? Interest rates rising is not good for traditional markets. It puts strains on traditional markets. Now, does that mean it will put strain on cryptocurrency? It's not really, doesn't translate, because we haven't had this kind of thing with crypto before. Yeah, we've had interest rate rises with crypto before, but not in times like this. I think everyone is saying that, what about the interest rises we've had before? Well, first and foremost, we had interest rate rises in 2018, and it's very hard to know what the effect of the interest rate rises in 2018 was, because as you guys would know, actually I'm on the Binance chart now, so I can't take a look, but I'll take a look here. As you guys would know, 2018 was like the middle of the bear market, and so you'd been inclined to believe that it was actually bearish. And so to make that argument is kind of stupid. And then before that point, the market cap was seriously way too small for any effect to be had really on traditional markets anyway. So, what I'm saying is interest rates rising on, say, in a few months, when it actually has time to filter through the system and take effect, that's going to be quite bearish. That's going to put a lot of strain on traditional markets. And when there is strain on traditional markets, as we know now, that leads to, for example, the S&P 500 dumping, and it leads to the DXY pumping. We know that the DXY is reverse correlated to Bitcoin. So if the DXY pumps, that's going to lead Bitcoin to dump. Now, if something changes there, if Bitcoin gets depegged, starts moving independently, that's a different story, but that's something we literally cannot say anything about because it's just all speculation. There's no evidence to suggest that's going to happen at all, besides blind speculation. So at this point, we have to assume that the interest rates decision was, although we're seeing a pump right now, short-term bearish. Why are we seeing a pump right now? Because it was successfully priced into the market, okay? And people are kind of happy that it wasn't a 50 basis point raise, because they're happy that the Federal Reserve is taking a very kind of almost pathetic standpoint on stopping inflation here. They've delayed this for like a year, and when they finally decided to go ahead and raise the rates, it's been a 25 basis point raise, which is literally nothing. Not literally nothing, but very minuscule. And so we can expect now that it started for this. This is not going to be the only rate hike, right? We can expect that now they've started doing this, they're going to start edging in some more 25 basis point raises throughout the year. And by the end of the year, it might end up we're up a whole percentage, whole percentile. That's going to take a while to kick in, but that's going to have a pretty negative effect in traditional markets, and that's undeniable, especially when inflation is this high and the risk of recession is this high. So, you can go ahead and say that this was a bullish raise, but in reality, it was just more bullish than a 50 basis point raise was. It's not bullish. It's just a ridiculous argument to make, because it's not possible, right? If you have any understanding of economics, you understand that rates rising is not bullish for traditional markets, right? I'm talking about the markets. I don't care about actual society. I'm talking about the markets. It's not bullish for the markets. So that's just what it is. But now that we've covered rates, let's look into TA, all right? Because a lot of people are thinking, well, okay, well, now that big massive event that I've been talking about for weeks is out of the way, what's the deal with TA? Now that we haven't dumped because of that, does that mean we just head upwards? I would say no, right? I would say I'm still bearish. Why am I still bearish? For the same reason I've been bearish for the last 4 months, okay? Because my invalidation point has not been met. I'm not going to flip bullish before my invalidation point is met, because that's FOMO. That's just FOMOing into the market. Where's my invalidation point? Well, my prediction, first and foremost, is that Bitcoin is going to head downwards towards the 200-week SMA, which is currently at around 20K. By the time we get there in November, it's going to be 24K, and my invalidation point is going to be coming from a weekly close above the 50-week SMA, which is currently at 46.1K. Right, so break 46.1, that's a weekly close above the 50. That's going to be a invalidation of my bearish prediction, and then we can flip macro bullish again. Until that happens, we're bearish. Right, there's literally no reason to believe that we should be going upwards here, in my personal opinion, unless we're above the 50-week SMA. You can speculate all you want, but at the end of the day, look what speculation has done in the past. Dead cat bounce, dead cat bounce, dead cat bounce, dead cat bounce. That's all speculation's done. So I'm waiting for the actual confirmation, because right now the trend is we go down, lots of people get bullish, they all get flushed out, we go down further. That's the trend. And so I suppose when you're risking so much like that, on every single pump or every single attempt, you're going to end up out of money eventually. But yeah, waiting for the invalidation point. Now, why am I saying November? Why am I saying the bottom's going to be in November? Well, that's quite I guess it's a little bit complicated, but I'm going to go through it anyway. So the 4-year cycle theory is suggesting that the bottom's going to be in November. Now, a lot of people would think, well, what's the 4-year cycle theory? That was invalidated in 2021 where we didn't pump to new all-time highs. The 4-year cycle theory, in my opinion, is not based off percentage. It's based off date ranges, right? And what we can see here is very clear trends happening with date ranges. As you know, diminishing returns is a thing, it's a factor in the market, and so we can't try and speculate what the percentage return will be, because as you know, global events are very different, in different cycles. But what we can speculate on is date range, because they're very accurate right now. So from top to the top in 2013 to top in 2017, 1,400 days. From the top in 2017 to the top in 2021, again, 1,400 days. From the bottom in 2015 to the bottom in 2018, again, 1,400 days, okay? Now we're taking these yellow boxes here. From top to bottom in the 2014 cycle, 413 days. From top to bottom in the 2017 cycle, 371 days. So a bit of a rough kind of similarity there. Now, if you're taking into account from bottom to top in 2015 to bottom to top in 2017, it was exactly 1,064 days. And the same thing in 2018 to 2021, exactly 1,064 days. Using the 1,400s and the yellow boxes, we can determine that the bottom is going to be roughly in November 2022, possibly December 2022, anywhere in that price range, okay? In that date range. So November to December. And then using the 200-week, which is where we've bottomed out on every single macro occurrence on Bitcoin so far. We've never closed a weekly candle below the 200-week SMA. We can assume that bottom's going to be coming in at around 24K, where that thing will be lurking at that point in time. So November/December, probably November, at 24K is where Bitcoin is going to bottom out according to this 4-year cycle theory. Again, what would invalidate that? Very simple. A weekly candle close above the 50-week SMA will invalidate that prediction. Now, moving on to something like the S&P 500. The S&P 500 has obviously pumped up. It's broken out of a descending wedge formation here, closed a daily candle above it. Why has that happened? Very straightforward. Interest rate decision was relatively bullish for the markets in the short term here. It wasn't, 50 basis points, and the market had already priced in a 25 basis point raise. And so now that it's priced in and it was ready to go, people saw, oh, okay, well, it happened as we expected, let's buy in. And so, yeah, I wouldn't be surprised at all if we start testing high resistance zones like this, like 4,500 or something like that, 4,550. That will be, quite a straightforward retest there. And whether we break that or not really depends. It depends on when the next decision is from the Federal Reserve. And I've just taken a look, and that decision is going to be coming at around April 27th to 28th, so just over a month away, about a month and a half away. So you'll see here that there's going to be a trend occurring, right? April 27th, let's kind of point that out on the chart. April 27th is, I'm going to draw a vertical line at it, roughly here, okay? So that is not very long away, right? That is when the next potential time the Federal Reserve can raise interest rates, and they typically do raise them consecutively. So we have a little bit of time to move around. But, generally speaking, there's another big decision on April 27th, and there's another one after that, and there's another one a month after that as well. And so if they keep consecutively raising these rates, it's not going to take long for it to have a dramatic effect on consumer prices. It's not going to take long for it to have a dramatic effect on stock valuations, right? This is not really a one-time thing. And looking at something like bonds, right, bond yields, these things are pumping, they're not stopping, and this essentially means, right, well, let me just break it down very simply. When this goes down, people think rates are going to be dropped or at least, stayed the same, but generally dropped. When this thing pumps, people think rates are going to be raised. This thing's pumping. This thing's in a clear upwards trend here. Obviously, TA doesn't matter that much with this kind of thing, but it's pumping and it's going upwards. And people are very clearly, in fact, if you notice the trend here, it started in November. What happened in November? Bitcoin topped out in November. It started in November when Bitcoin topped out. It actually directly resulted in the Bitcoin top, as well as the 4-year cycle theory, of course, because it's all connected. It's not just all individual. And it's been pumping ever since, and there's no reason for us to believe that it's going to stop pumping. Now, the DXY has been pumping as well. It's broken out of ascending wedge formation, and it's broken a multi-decade long pennant formation, okay, or triangle formation, and that's broke to the upside. Now, we do have a little bit of red there, and that's to be accepted, a bit of a rational price movement there. But generally speaking, what happens when you see interest rates rise is you see people selling their risk on assets and flocking into cash, which leads to the DXY pumping. And as we know, the DXY is reverse correlated to Bitcoin. Now, in terms of market structure itself, what we're seeing really is the top here in 2018, and then we're seeing the bear market period in 2018, the initial period, looking very similar to the current period we're seeing. I mean, almost identical. And this is not a surprise. Okay, this is what we've been talking about for literally months. Look at these two red boxes. Okay, so this is the red box from a dead cat bounce period in 2018. This is the red box period from the the current dead cat bounce. And I don't go off fractals. I think fractals are very risky, but it would suggest that we see a pump here. And so it's not illogical to assume we're going to pump a little bit here. It would suggest we see a pump, but I'm not basing anything off fractals. I don't think they matter that much. But just be aware of this. Just be aware of the fact that in 2018 we did something very, very, very similar, and it didn't necessarily throw us back into a bull market. In fact, we went down almost another 60% from that region. Now, as for the daily chart is a little bit more debatable. I can understand why people would be on the fence about the daily chart. I myself am personally slightly on the fence. I would say, again, it leans more towards bearish. Why is that? Because at 42 to 42.5k, we have three major uptrending and downtrending resistance lines. They're all dotted, and they're all coming into that same region at 42.5k to 42k. Now, 42k itself has been a major resistance zone throughout the entirety of the crypto market in 2021. This is not a surprising area for us to find resistance, right? We've found resistance a few times here, and if you looked at something like the volume profile, you would see that it's actually a pretty major resistance zone. Now, so we have three separate diagonal resistance lines and a horizontal resistance line at 42.5k that we've rejected off before. So, unless we get above that, it's going to be very hard for us to break any higher on Bitcoin. And that's going to be a major point of contention. Breaking that's going to be a very big deal. Now, what is going to be the biggest deal is obviously, as I've said before, where the invalidation point is, which is at 46.1k. And let me draw that out right now, where that is, around there. So I'm going to make this a thick blue line. 46.1k, as you'll notice, is just above the 45.5k resistance zone, which we found support on the lows in December and resistance on each of these dead cat bounces. What you'll also notice is that 45.5k is basically the top of this ascending channel formation that we're in on Bitcoin. And so in order to break back into a bull market, essentially we're looking at this. We need to break the bull market support band. We need to break the top of the structure we're in right now, which in my opinion is ascending channel formation. We need to break 45.5k. We need to break three diagonal resistance lines, and we need to break 42.5k. Okay, so it's actually really not as close as you guys think. It's quite a while away. And if you're flipping bullish right now, you need to understand how much work we have to do, really, in order to break above. Now, that said, if we do break above 46.1k and we do close a weekly candle above it, I don't care about a wick, close a weekly candle above it, we'll be above basically everything. We'll be above Ikomoku, be above bull market support, be above both the 50 and the 200. We'd be above the POC, we'd be above the Bollinger Bands. Nothing's loading right now, my internet might be cutting up, but the point is we'd be above basically everything. So I suppose the point of this video is to just clarify what's going on with interest rates, how people might be trying to convince you that it's actually a bullish decision. Might be bullish short term, for sure, there's no denying that, but longer term, this is not a bullish decision. That's what it is. It's not my opinion. And as of the charts, as of TA right now, well, there's a few things. We're in a very similar structure to what we were in the 2018 dead cat bounce period, and we're below a lot of resistance right now. And the invalidation point hasn't changed. That's staying the same, and it's still above a lot of resistance. So just be careful, guys. Don't fall for it. Don't fall for it. Wait for confirmations. I've been saying this, you don't have to listen to me, obviously. Do whatever you want. But every single dead cat bounce we've had so far, this one here, this one here, this one here, and this one here, I've been saying the same thing. I've been saying that it's not time to flip blues yet. Wait for confirmations. Everyone who didn't wait for a confirmation on the last 4 tries has failed miserably. Why is this time different? Okay. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video.